Yusuf, what's up? I'm alright, my man. I'm alright. Um, what's good now? Alright. We'll do fast. What cup we soon start? I can sit down and watch. Alright now. Uh, so now BTC is what you say as in the wine as well. I'm still watching this. I'm still watching this particular trade. Yeah, it's just building up liquidity. Like when it finishes doing what it wants to do. So yeah, it has engineered liquidity. So with that. So yeah, just go down silver. BTC is just by the way. So now waiting now the old trades will catch last week. This was upper week. This is still running. Others have been closed, and we are expecting a trade higher up this weekend. This week, right? They set our limit, so hopefully we get a gap up and mitigate. Oh, you can't see my screen. Sorry, sorry. Hold on. Window. Yeah. Let me know when you can see it. All right. All right. So basically, now waiting. Now the whole thing is will catch with this simple. Yeah, you understand the concept now. It's quite so now let's just I'll use another server. I don't want to clear those things on FX. Yeah. So let's go from the beginning again just so we can understand what we are doing. So the first thing we want to do is we want to understand the macro trend, right? And the macro trend is so if you look at it and ask yourself what is the macro trend, or you just want like have a deep understanding, you can see that it has been bearish. Price has been creating and respecting highs all through, right? So we can see that there's been like a bearish trend line that price has been respecting. We are not using a trend line, we just want to use it to depict the bearishness of price. So now that we understand the macro trend, the next thing is to understand the macro range. That is, we want to understand the range within the trend. So you get. So now, and the range within the trend for us is this break of structure. This is still the range we're playing within. We've not gone beyond this range, right? So that being said, hold on please, hold on. All right, so back to it. So we have our trend, we have our range now. So that means we have a playground or our boundaries from this point to this point here. So now because this week we are looking at, we want to understand where we are coming from. And where we are coming from simply means that we want to understand the drawn liquidity that we've taken and the drawn liquidity that we are going to be approaching, right? So the drawn liquidity that we've taken, is it internal or external? Where are we going to? Is it internal or is it external or internal? Are you still with me? So okay. So basically now we understand our range, we understand our trend, we are bearish. Now what are we looking for? We are looking for liquidity that has been taken. So in that sense, you can see that this high has been taken. Internal range liquidity. Sure, you get me here. We've created the range, we've gone higher, and well, is it your own? Okay, okay, yeah, no problem. Connect with your phone. Okay, okay. I will still send the recording. No worry, I'll recorder. So basically now we are asking ourselves within the range or subject to the range, that is regarding the range that we have now, we already understand that it's bullish bearish. What exactly, where are we coming from? What's the drawn liquidity we are coming from? Right? You can see that this high, weekly high has been taken, right? And price is not just go and take it, it's used it to respect. Can you still hear me? I'm in my network. Um, no, just they go. I go send you the recording, everything from my end here. You go see them. Yeah, because I don't think the network is good on this end. So now, having understood where we are coming from, we see that it's not just a random point we are coming from actually, right? We are coming from a key level that occurred after on the daily. You can see this is more like a break of structure here on the daily. I'm sorry, what am I saying? Let's not even dwell on what has happened because of time. Let's just focus on what we are going to be doing. So now that we understand our draw liquidity, we are going to be looking for the target liquidity and target liquidity because this high has been taken. We want to see this low taken, external range liquidity. So that means we are going to keep selling until this has been taken, right? So that is out of the way. Our bias is bearish. Now let's go to the median time frame to see what is happening. On the median time frame, we want to understand if there's an alignment or there is no alignment to understand what we can then do. So since that liquidity has been taken, you can see that all of this you should even be familiar with this move because we caught everything. Exactly. I think my network is okay. So you can see this high. This also we had a change of character and whatever to align with the macro structure. And then we had this low created, then this high, then this low, then this high, then this low, right? Finally this high, and now we have created this low. Do you understand? So now the median time frame is also now aligned with the higher time frame, meaning that we can safely look for sales within these boundaries now, this high to this low here. Within these boundaries, we can safely do what we can safely look for ourselves to then go and take out finally the external range liquidity. So it may not be clearer here, but if you go to 4 hour time frame, you can see now we have a break, a body break below. So that gives us assurance that we can look for sales. Now we now have to repeat the progress. Now that we know that the median and macro time frame are aligned, we want to look for the point of interest within here that we can use as you get as a point of reference, right? As a point of reference. Because now you ask yourself again, where is price coming from? Has it taken liquidity? It has taken liquidity from here. This low has been taken out. So it is going to seek what? Internal range liquidity. Am I correct? Yeah, good. So if it is going to seek internal range liquidity, the question we need to ask ourselves is where is the liquidity within the range? And we can see that there's a fair value gap here. Let me just use this as the eye. There's a fair value gap here because that's what we used, right? So, and the reason why we are considering this area is because there's a multiple break of structure here. There's a break here, and there's a break below. There's a break there, and there's a break below. So we have one more break here. With this serving as the inducement, right? So if this is the inducement, we are going to be looking at the breaker blocks and the POIs within this area. And you can see that price has already mitigated this POI, but we are focused more on the body bar. So now this is where we are for the week because we are still bearish. Macro trend is bearish, macro range is bearish, right? And then we are going to seek external range, external liquidity of the macro range. Coming to the median time frame, we can now see that the median time frame itself is bearish, and we have created a range, a break of structure. We are now going back into the range, and it has created what? It has created liquidity. Not only has it taken out the liquidity, it has created another one that should be taken out, and it is the structural liquidity. If you look at the daily here, you can see that there's a previous daily high that has been created here, right? So I would naturally be expecting that this is taken out. So within that multiple break of structure, we now have liquidities that should be taken or liquidity that should be taken out. So normally, due to the candle range, if this is taken out, this should also be taken out. Do you understand me? Yeah. So it's not jargons. I see say you don't quiet. Now why they talk say if you guys say you know they understand them. See, really, I they come. Let me try and reconnect. Hold on. Yeah, yeah, I will send you the video. You know what? That one is small, so I will send them to you for 2G. So basically, you can see now that it is all aligning. We just need to look for ourselves, right? And last week, you know that on Friday, we thought that price had already, left us because this is our key, our entry here. This is actually our entry on the 2 hour time frame, this breaker here. You remember, right? Our break. Okay, you're not seeing my. You're not seeing my. Let me try and share it again. Yeah. Okay. Okay. Good. Good. So this 2 hour breaker is very paramount, is what we are looking at, right? And it somehow covers the 4 hour order block also. So it is an area that is key. So we set our limits. We're just waiting for. Can't share your screen. Okay, no well. So it is an area that we're looking for. Okay, okay. It is an area that we're looking at, price mitigating, then we can now sell to the downside. You understand? So it is all shaping up to be a good sell bias. However, we cannot just stick to one and say we are selling, we are not looking for buys. But I want you to look at this point also. There's an FVG up here. When you watch the video, you see there's an FVG up here. I do think that price does not have any business here again because of the fact that the multiple reconstruction we are looking at did not just it took out liquidity, right? It took out liquidity before then breaking structure. So for me, I will not look at the 4 hour FVG unless our setup is invalidated. Do you understand? So during the week we'll look at that. So let's quickly look at silver before. So for silver, these are the entries we could get on silver. Yeah. So these are the entries we could get on silver for last week. Let's look at what we can get this week on silver. So on silver, like the same concept we always do, right? We want to understand the macro trend, we want to understand the macro range. Now on the macro trend, we are still bearish. If you use the EMA on this one, you see that we're still bearish. It's still trading below the EMA. So we're still bearish. Even if you use the trend line, we are still bearish. We've just been sinking to the downside. So that is sorted. Now for the range itself, you see that price has already closed below this um the previous external range low. If you use your zoom tool, you will see that it has closed below it, meaning that we are now in a new range and we have to start afresh. So by starting afresh, now I know that we have our bearish range and our bearish trend. We are still bearish on silver, right? Now the next thing we want to do is to look at where we are coming from. Currently, no liquidity has been grabbed in any sense apart from the fact that, let me check the weekly time frame. Hold on. Yeah, for me, liquidity has been grabbed, but I'll wait for price to I'll wait for an opposite order flow to develop on the median time frame, right? So obviously now that we've taken out external liquidity, we are going to go and seek internal range liquidity. And what internal range liquidity do we think that we can seek on silver? Firstly, we can see that, let's look for fair value gap. There's a fair value gap high above that has not been mitigated. Price could get there, right? So that will also inform the area I'll be looking to sell from. There's a point of interest there. There's a big candle that actually took out liquidity and was engulfed. So that is an area of interest for me. Sure you get, and that's where we should be looking at because every other thing around there is for me not valid, especially the FVG that is below here. This is too low. It's too close to the external range liquidity. Unless of course we have a multiple reconstruction at the lower time frame that can give us an idea that we can sell from there. So let's go to the lower time frame. We already understand that we are going to be seeking internal range liquidity, and for that to happen, external range liquidity needs to be sought after. And going to the 2 hour time frame, we are still bearish on the 2 hour time frame. So we can actually look for, yes, it has not given an MSS or a universal pattern for us to look at, higher and look at buying. So what we can do, if you're on the 2 hour time frame there, good. So if you look at the 2 hour time frame, you will literally see that we are still bearish, right? And if I mark out the structural play from here, we have this side creating a slow high and has created. So basically, we have this whole range playing out. So now we are still bearish. But if you go to the 1 hour time frame, I want to try and look deeper if we can get any done. Yes. Okay. So for me, it's not really clear. I would not want us to force anything on silver right now. But what we can say is that on the medium time frame, we are still bearish, but there's no continuation. There's no continuation opportunity for us to take, right? There isn't. So we're just going to wait to see how that pans out. What I can see is on 4 hour time frame. It's on. Mhm. Yes, it's too close. Yes. So I don't want us to like take from that point. Yes. Mhm. Yes. It's the price action there is quite choppy. Yes or yes. Yeah, it's choppy. There's really no sense of like involvement, like sense of when it comes to institutional play, there's really no sense of involvement there. So yeah, so we don't want to get faded, right? Even though we are trading us MBOS, small bigger structure, we want to trade them at levels that we know that price can actually give reactions. Here now, the beginning of the week, we can just get a liquidity grab to a downside and then boom, clears that FVG on the daily, that one that is close. It is the reason for price to come up. So we can use that one to buy instead of sell, and then target, because majorly on silver, if you are looking at it, every point of interest has been mitigated. Every area that should serve as a magnet for price, right, has been mitigated. So for me, it's more like the only area, if you go to the 4 hour time frame and you mark the higher low of the previous trend, right? Just mark the last higher low of the previous trend, the first higher low of the previous trend. When you watch this video, you see what I'm saying. You will see that on the 4 hour, there is more like a some sort of most people of structure. But it's a kind of setup I don't like. It's a pattern I don't like because it's not clean. It broke it gave inducement. We marked it last week. Remember that one that we marked last week that price didn't come back for. That is it. That same one. So that area itself is still valid, and there's some sort of other block there that has not been mitigated. So when you watch this video, I've marked everything. I'll send it to you. So we have the external and the internal load being taken care of, right? So at the same level. So it's more like multiple week of structure. Sure you get. So and if you look higher, you see that there is a breaker that is actually aligning with fair value gap, right? There's aligning with fair value gap. It's just a whole lot. And on the forward, there's a fair value gap that has not been mitigated completely. And after that fair value gap, there is actually an order block that has not been mitigated. And that for me is the only order block that price can use. The only one that price can use. And there is actually inducement feeding into it. So now we might have actually gotten our area of interest when it comes to uh, silver on the 4 hour time frame. That's the only one. If price takes that out, then it's definitely going for the daily OB at the top of the range. Do you understand? At the top of the range. That's where it's going to. So for silver, we're going to be very weary, meaning that even if price comes to this area that I've marked that could be used to continue the sales, we are going to wait for alignment on the lower time frame before we move for any entry. Sure you get. We're going to wait for alignment on the lower time frame because it has not. Yes. No, yeah, 67 points, 57.48, 57 point. You've seen it on 4 hour bar. Yeah. It's like a doji, like a inverted hammer. Yes, yes, and that's the only point where there's an imbalance that price can come to, and it is actually coinciding with a lot of breakers around that area. Like there are a lot of blocks around that area from the top to the bottom that actually have been invalidated by the move. Sure you get. So it is an area to watch, but at the same time, we'll wait for we'll wait for what's the name alignments when price gets to that point. So that's what I'm saying on silver. We're not going to force it. We're going to like just take our time, and that's just it on silver. That's just it on silver. But you need to know that now that silver has cleared its external liquidity last week, gold will definitely clear its own this week. Definitely, it will clear its own this week because silver precedes it. So that's just it for the outlook. Hope say you understand that. Like silver moves faster. Like silver can break a high before gold, but if silver breaks a high, gold will break its own high too. The same before low, yeah. So if you're like skeptical, you can just check if silver has done its own. If silver has done its own, gold will do its own. It's just take a bit of time. So you get. Yeah, so that's just it. So on gold, we are pretty clear. Yeah, we are still looking to onto the external range liquidity of both the higher time frame and the median time frame. They've not been taken. Therefore, silver, we've taken out macro external range liquidity. We are looking to go back into the range now because that's created a new range. We're looking to go back into that range to now get a new, base trade that we can now use to ride the trend. Sure you get. So that's what we'll be looking at. So even this 4 hour inverted hammer that we're looking at, it is only going to be used as a continuation trade because it is not even within the premium of the range. Yeah, it's not within the premium. So it's only going to be used to continue the sales. It's not going to be seen as a pure reversal into the range because every high here, if price mitigates it, that means every high here is going to be liquidity when price decides to use the range itself. Then if you go to the top of the range, right, then use that POI, and we don't know if it will use it to continue sales or it will break it. We don't know. All we know is that price will reach into the range. Sure you get. So that's just it. We watch the video, but I just been I don't know what they do network tonight. But now something we say easy there. So that's just it. Uh, this week we'll make money. No for yeah, 100. All right now. See you later. Yeah.